Welcome back to Vantage, the penultimate one in this season, I believe. Emerging markets of late have started getting a little bit of interest amongst investors, so we thought we'd go and take a look at a manager of one of the fastest growing economies in the world. Let's go take a look. Welcome to Vantage. I think the penultimate in this season, but we are delighted to be revisiting Vietnam again. I have Khanh Vu, who is a manager of a Vietnam fund. First time on Vantage, welcome to the show. So to begin with, maybe you could just introduce yourself briefly and describe what your role at VinaCapital is.
Thank you, Neil, and thanks for having us on the show.
Pleasure.
So my name's Khanh Vu. I'm the fund manager of the VinaCapital Vietnam Opportunity Fund. The VinaCapital Vietnam Opportunity Fund, or VOF, is listed on the London Stock Exchange. We're a FTSE 250 company, and our focus is Vietnam. So we're a single country manager based in Vietnam, investing into Vietnam.
Yeah. And now every time we hear about Vietnam, there's this remarkable growth story that we sort of touch on. And that's not just of last year. It's been a 3-decade story. What, in your view, are the main drivers effectively that have been sort of transforming Vietnam, and what do those hold for the future?
So when you look at Vietnam, we'd like to say it starts with the macro.
Yeah.
Right. So if you have confidence in the macroeconomic story and that trajectory, then this is why you should be looking at Vietnam, and this is why we're there. When we launched our firm and this fund in 2003, I think the GDP per capita was about $250, $280. Today, GDP per capita is about $4,000 over that 22-year period.
Okay.
And that's a very important inflection point, because Vietnam is now entering in this middle-income economy. And what's driving the Vietnam is obviously this huge demographic dividend. We're a country of 100 million people, 60% of it around 35 years of age. And I'd like to frame it here when I meet with investors in the UK, it's like saying the entire UK population is this young, productive, upwardly mobile, consuming group of cohort. And that's what's driving the Vietnam's growth, and that's why we, being there, are participating in that.
Okay, and so with that backdrop in mind, because we'll get into what that leads you to invest in, but before we get into that, let's understand the strategy effectively that you adopt and how you're trying to differentiate from other funds in the region.
So our strategy is embodied in our name, the VinaCapital Vietnam Opportunity Fund. So we're an opportunity fund, meaning that we are unconstrained with regards to sector, asset class, holding period. We invest across the liquidity spectrum from private to public.
Okay.
And because of the nature of our fund, a closed-end investment trust listed here in London, it allows us to take long-term views and positions in companies we invest in. Because ultimately, when you look at Vietnam, you're looking for growth. So for us, we apply what we call a private approach, a privately negotiated approach to opportunities. And the interesting thing is that approach allows us to look at both public as well as private opportunities.
Okay. And so when you're looking at that, now describe the actual investment process. So you see something, how do you go about sort of kicking the tires, and what are you looking for in a prospective portfolio company?
So being based in Vietnam and the team that we have, our founder, who've been doing this for a very long time. So the network that we have that allows us to seek opportunities and source opportunities is very extensive. We go beyond the Bloomberg screen. We go out and meet with companies. We go out and look at what's happening in the real economy. And from that, those ideas and that creation of ideas comes about. Also, what we've been invested in over 200 companies since this fund has been formed. And it gives us a lot of insight into the opportunities that are available. Once we find an opportunity, whether it be in a company, in a sector, in a particular ecosystem, we'll go out there and we'll meet with the founders. We'll sit with the founders. And we may not even invest for immediately. We may spend weeks, months, years to get to know the people involved in this business. And that's part of what we call the due diligence, right? And having that confidence in what these business founders and entrepreneurs are able to deliver that gives us confidence to be invested and to be invested for a long period of time. And then from that, this incredible trajectory of value creation is possible.
Okay. It's a very tangible process, isn't it?
One of the things I'd love to do is, go to the supermarket stores, because we have a big allocation to consumers, right? Run your finger on the supermarket, see where the products that we've invested in are placed. We have a very big exposure, say, to hospitals, right? And we have about 10 hospitals on the platform. We go and, myself, I go and look at other hospital service providers and see how their service offering is. So it's a very active, tangible, on-the-ground approach.
Yeah. Okay, good. It's a good segue. So, I mean, we always find for our viewers that you can talk about the theory and the investment process, but it's really brought to life by the actual stories that you invest in. So maybe you can talk to us about one or two sort of success stories that illustrate your investment approach.
So for us, there are several, and I think equally as well, we've learned a lot of lessons over the years by investing. And from those lessons, we hope that, we entrench that in what we do. But one of the most recent successes is this hospital platform that I was referring to. We've recently been able to exit. And this hospital platform basically started 7 years ago, where we invested into a doctor who has a good track record of building hospitals. We were able to invest alongside the doctor, participate in the roll-up and bolt-on strategy, and expand his platform to where it is today. And then most recently, we've been able to exit that to a strategic investor, the financial investor in the region, I beg your pardon. And that's an example where we have actually been invested into a doctor 15 years earlier. And so again, it comes back to the point I made earlier. Finding people with a track record, not just investors, but entrepreneurs, is really important. And from that, we're able to find the opportunities and grow. Another example is that we were one of the very early investors into one of the leading dairy milk companies in Vietnam. It was a state-owned company, and then it became privatized. In Vietnam, it's called equitization, but in the UK, privatized. And this company, when we first invested into it almost 20 years ago, was when it launched, about 400 million market cap. By the time we fully exited our position, it was about 12 billion market cap. We had been able to deliver almost 6 times our invested capital. And it was through both initially sitting on the board, playing a role in the governance, and then seeing this company evolve and mature to where it is today. Interestingly, it was one of the very first large companies in Vietnam to open up its foreign ownership limit. So in theory, it's an example of where Vietnam is heading. Companies that are large cap open themselves up to foreign capital, good governance, and working well with the community and the people that they serve.
Okay, perfect. You talked earlier about one of the key drivers of the Vietnam growth story being the demographic dividend, as you nicely put it. Of course, that has been clouded to a certain extent in the first quarter of this year by the noise around tariffs and global trade tensions. How do you expect Vietnam to emerge from this? And in particular, is there anything that positions them more competitively than other sort of countries in the region, peers in the region?
Yeah, so obviously the Liberation Day tariffs took a lot of countries by surprise. And of course, for Vietnam, the initial tariff rates that were proposed seemed very high. However, as we've seen, countries are able to negotiate. And what we expect is that, Vietnam, the cases that we're building around at the moment is a case where Vietnam's tariffs could be anywhere between 15 to 25%. Well, please don't hold me until it comes out. But the point being is that at that rate, Vietnam can certainly absorb that. And why is that the case? Well, because if you think about the cost of labor in Vietnam, it's about a third of that for factory workers, or a third of that of coastal China. So it still makes a lot of sense for companies that had been based in places like China to move to places like Vietnam. The second thing is that we have, coming back to the demographic story, a very highly skilled workforce. If you think about where we've come from 20 years ago, 30 years ago, producing textiles and agricultural goods, today we're doing electronic goods. So if you have a pair of Apple AirPods or a Samsung phone or an iPad, that's made in Vietnam, or increasingly more so. So that highly skilled workforce is very difficult to replace. And therefore, even with the tariffs in place, we still believe that that manufacturing export story in Vietnam still remains very relevant.
Yeah, and look, by the time this goes out, as you said, I'm not holding you to it. By the time this goes out, it could have all changed. So thank you very much for coming on Vantage. It's always fascinating to hear about, Vietnam, what's driving, etc. Hopefully we can get you back again next time you're coming through London to update us on a story. For the audience, if there's any other managers that you want to see, please do drop me a line. Thank you for watching.